Hello from Otet Markets. This is Huro will be with you to review the latest market changes, especially the European Central Bank meeting and market reactions. Today, before going to European Central Bank and talk more in detail, I will review some more data from Turkey and United States, and then we'll go back to the European Central Bank as we want to talk more deeply about that. Turkish Central Bank also had a monetary policy meeting today. They cut the rates by 2.5% and from 45% to 42.5%. The Turkish economy was under pressure, especially with holding the rates for a long time, about 50%. And now the central bank decided to cut the rates step by step and make it lower to support the economy as it is really actually under pressure. Besides that, net FX reserve and the gross FX reserve also slowed lower, which could not be a positive sign for Turkish lira, and it can be under pressure for next month. In United States also, we had just a few minutes ago, we had continuing jobless claims, initial jobless claims, and generally the labor market data. Initial claims for unemployment benefits fell to 221,000 from 242,000 registered previous week, a week before that, actually, because this data is for the previous week. And continuing jobless claims increased slightly to 1,897,000 from 1,855,000. Generally, with the lower claims, with the lower initial claims and 4-week average, we can say that the labor market is still strong and resilient in the United States. That's why we are expecting positive NFP data for tomorrow. Also, we'll talk about the NFP tomorrow and review the data after that, review the market as well and market reactions. Besides that, non-farm productivity increased by 1.5%, better than expected, but lower than the previous quarter in the fourth quarter 2024. Trade balance also fell more as imports increased in the United States and it generated much more than exports. But about the European Central Bank is the main focus of this market update. ECB cut the K rates by 25 basis points. And according to this decision, the K interest rate, or we can say the main refinance operations rate, fell to 2.5%, lower than down from 2.75% in the previously. And also the marginal lending facility is to 2.65%. This generally, we can say that the central bank, the decisions that made in the central bank, in European Central Bank, it was in line with expectation. Even the asset purchasing program, or APP, or the pandemic emergency purchase program, PEPP, they decided to no longer reinvest the principal payments for to lower generally the commitments of the central bank in Europe. That means that this because that the European economy, European Central Bank is expecting a weaker economy for the next week, as they also lowered their GDP expectations for the global economic expectations to 0.9% for this year. It was about 1% in the previous expectations. It's fell to 0.9% for 2025. For next year, it's again they decreased it to 1.2%, and for 2007 they decreased it to 1.3% as for the GDP expectations. In line at the same time, they increased the inflation expectation. The headline inflation for this year, they increased it 2.3% from previous 2.2%. For 2026, they're expecting 1.9% as headline CPI, and for 2027 they expect 2% as the headline inflation, and they're expecting a long term. They see the headline inflation around 2%. The main reason that they increased the inflation expectations and lowered the GDP growth is because the political condition and higher energy prices that we had and they're expecting to see. So generally, what we can say from what we can see from European Central Bank is that the Europeans, they are not much positive about the future economic activities and also economic growth, which is not a good news for Europeans. As the market reaction, if you look at the market, if you look at the charts, Euro USD chart, here's the chart, here's the Euro USD chart. If you look at the Euro USD chart, maybe in the first initial reaction, we can say that okay, the Euro slightly increased against US dollar, but that's the mainly because of the weaker US dollar, not because of stronger Euro. So that's why this news, as mentioned earlier, it's not this news and decision is not a good news, or it's not even a bad news for the Euro, because higher inflation expectation means more hawkish policies, and lower GDP expectation means more dovish policy, which they somehow they overcome each other. So it means that the natural that could be the natural news for euro. If it's a natural news, it means that in a longer term, we can say in a bigger picture, we can say that's the negative news in a bigger picture. I mean, not the negative. We can say in a bigger picture, it's not a supportive news and supportive data for euro against US dollar, against its rivals, especially against US Japanese yen. And the stock market, so that's lower GDP expectation and higher inflation expectation means generally and directly negative news for stock market. So that we are expecting to see the inflation, generally this financial markets, especially the stock market, lower in the next days. As for US dollar and the US economic data, we saw that the initial jobless claims, it fell, which means the labor market slightly increased. The labor market slightly again after previous week's problems. So we can say generally that with this condition that we have in the market right now, we can say that for next months, for the next meeting of the Federal Reserve meeting, which is going to be the next week, so Fed will hold its current policies and current rates, and we can expect a more hawkish tones somehow in its statement. So with this condition and with this overall general condition that we have in the market, we can say that the US dollar, which is still already under 104 mark, can recover about 104, and we can expect a stronger US dollar, but stronger, not stronger. I mean, stronger than condition, but not strong. But with this condition in the stock market in Europe and the United States, we can say that these news could be the positive for gold. So the gold can hold itself above 2,900 US dollar, and we are generally positive about the gold and gold prices. But for the energy, it's not a good news. The negative stock market, negative expectation for the stock market cannot support the oil price. That's why we are not expecting to see for now in the short term the oil price about $69. So the price could be around $67 and $69 for now. And for the stock markets, as mentioned, it's not a good news, and we can say stock market can be under pressure. Another market is for the cryptocurrency market. If we say that this news has anything to change the cryptocurrency market, I can say no, because mostly the cryptocurrency market, you're waiting for tomorrow's in a White House crypto meeting. So the crypto market will be waiting mostly for this market, for this news for tomorrow. So not positive and not negative reaction for this market. That was a general market condition and a reaction. If you had any other questions, you can write in the comment section. I will try to get back to you as soon as I can. Have a good time for now, and bye-bye.